For Immediate ReleaseChicago, June 1, 2018, Zacks Director of Research Sheraz Mian says, while growth is tracking notably above historical periods, the proportion of positive EPS surprises is in line with historical periods and revenue surprises are tracking below the four-quarter average. Earnings picture good, but not improving. Note, the following is an excerpt from this week's earnings trends report. You can access the full report that contains detailed historical actual and estimates for the current and following periods. Please click here. Greater than. Here are the key points. Retail sector results show strong growth, but a smaller proportion of retailers are beating EPS and revenue estimates relative to other recent periods, with results from 98.5% of the retail sector's market cap in the U.S. is on track to be notably above other historical periods, though positive EPS and revenue surprises are not as numerous as had been the trend in other recent periods. For the 493s, the earnings season has ended for 11 of the 16 Zacks sectors. Except for the proportion of these 493 index members beating EPS and revenue estimates, which are tracking roughly in line with the preceding quarter's level. Growth in Q1 is notably tracking above historical periods. Looking at Q1 as a whole, total earnings are expected to be up 24.2% from the same period last year on 8.6% higher revenues, the highest quarterly earnings growth pace in 7 years. Net income margins for the quarter are on track to expand by 1.5 percentage points, with the strongest gains in the finance, technology and energy sectors. Q1 earnings growth is in double-digit territory from the year-earlier level for 13 of the 16 Zacks sectors, including the technology and finance sectors. The auto sector has the weakest growth of all 16 sectors, with 0.3% earnings growth on 1.4% higher revenues. Energy sector earnings increased 75.7% from the same period last year on 14.2% higher revenues. Excluding the energy sector, total earnings for these companies are up 25.2% on 9.4% higher revenues, with 55.6% beating EPS estimates and 72.1% beating revenue estimates. In addition to earnings and revenue growth, revenue surprises are notably tracking above historical periods for the small caps. For the quarter as whole, we have more details about small cap data on page 28 of the full report. For full year 2018, total earnings for the year expected to be up 19.6% on 5.9% higher revenues. For full years 2019 and 2020, earnings are expected to be up 9.6% and 9.7%, respectively. Revenues for the index are expected to be increased by 4.5% in each of the 2 years. The implied EPS for the index, calculated using current 2018 P/E of 17.4x and index close, as of May 30, is $156.35. Using the same methodology, the index EPS works out to $171.29 for 2019, P/E of 15.9x, and $187.87 for 2020, P/E of 14.5x. The multiples for 2018 and 2019 have been calculated using the index's total market cap and aggregate bottom-up earnings for each year. Retail sector scorecard with results from Dollar General, NYSE Smiley Face, Target, NYSE Smiley Face, and other traditional retailers out now. We have Q1 results from the equivalent of 98.5% of the sector's market capitalization in the U.S. Total earnings for these retail sector companies that have reported results are up 21.3% from the same period last year on 9.3% higher revenues, with 69.4% beating EPS estimates and 63.9% beating revenue estimates. Follow us on Twitter, http://twitter.com/ZacksResearch. Join us on Facebook, NASDAQ Smiley Face, http://www.facebook.com/home.php. Media contact Zacks Investment Research 800-767-3771 ext. 9339 support at Zacks, com http://www.zacks.com. Zacks.com provides investment resources and informs you of these resources, which you may choose to use in making your own investment decisions. Zacks is providing information on this resource to you subject to the Zacks terms and conditions of service. Disclaimer. www.zacks.com/disclaimer. Past performance is no guarantee of future results. Inherent in any investment is the potential for loss. This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting or tax advice, or a recommendation to buy, sell or hold a security. No recommendation or advice is being given as to whether any investment is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors or markets identified and described were or will be profitable. All information is current as of the date of herein and is subject to change without notice. Any views or opinions expressed may not reflect those of the firm as a whole. Zacks Investment Research does not engage in investment banking, market making or asset management activities of any securities. These returns are from hypothetical portfolios consisting of stocks with Zacks rank equals 1 that were rebalanced monthly with 0 transaction costs. These are not the returns of actual portfolios of stocks. P.S. Visit http://www.zacks.com/performance for information about the performance numbers displayed in this press release. Dollar General Corporation, DG, Free Stock Analysis Report. Target Corporation, TGT, Free Stock Analysis Report. Original post.